Welcome back. Lots of earnings and lots of news flow to go over. And we have our team standing by with a CNBC-TV18 list of top stocks to watch. Well, guys, happy Friday to all of you. Can't say thank God it's Friday today, but we can still be happy this Friday. Let's start off with L&T. Vivek, what do you make of it? The announcements on the order inflow are stupendous. But what about the rest of it?
Well, that's right. Good morning. So L&T will remain in focus. Remember, largest capital goods infra company as far as the entire Indian capital goods sector is concerned. Remember, what's actually transpired over here is that execution has been quite strong. Core margins continue to remain quite unhealthy at this point of time. So revenues are up by a little over 17%, much above the CNBC-TV18 poll. However, the core EBITDA came in at close to 6,255, below the poll of close to 6,600 crore. Margins, the consolidated margins, the one that we're talking about, 9.7%, well below the poll of 10.4%, and profitability also below the poll. Now, the core operating margin in the E&C business, that business that which the management had guided for a margin band in the range of 8.2 to 8.25, that has come in only at 7.6%, which is a significant miss. And this is something that the street has been awaiting in terms of a margin recovery. Q3 order inflow, that is the strong point of this particular results. This stands at 1.16 lakh crore, well above even the highest estimate that the street had. Order prospects continue to remain quite healthy. 5 lakh crore is the order prospect that the company has as far as Q4 is concerned. Now, the good part in the call is that the management has maintained guidance across all of the key parameters, including the core margin guidance of 8.2%. Now, the company has also said that there is an upside risk to the order inflow guidance of 10% that the company had guided on a base of 3 lakh crore last year. So remember, order inflow guidance could be up, revenue guidance also could be up. Core margin guidance that is maintained, but the Q4 ask rate is quite steep. Expect the stock to open in the red, but could see some recovery on the strong order inflow.
Thank you very much for that. It's over to Vinny now for Tata Consumer. Vinny.
So in terms of numbers that have come in for Tata Consumers, largely in line with estimates that we're seeing overall results. But India margin, that's a bit of a concern that's coming in there. Due to the steep rise in tea prices, we've seen India margin see a bit of a decline. On the international margin front, they've seen an expansion coming in. And overall also that is supporting the EBITDA margins of the company. So yes, EBITDA margins for the company have come in at 12.7%. Our poll was also 12.7%. But overall, year-on-year basis, the margins have seen a contraction of around 230 basis points. What other key concerns that come in for the company is in terms of the growth of the India business and core business over there was just 14%, where they were expecting a growth of around 20%. Tata Sampann revenue growth was just at around 23% versus 30% was what was guided by the company. So yes, keep an eye out on Tata Consumers. Maybe a bit of a muted start is what one could expect, or a bit on the red side is what we're watching out for, and then maybe move on to the green.
All right, Vinny, thank you very much for that. In fact, you'll hear from the manager of Tata Consumer at 9:30 this morning. So stay tuned for that. Well, let's talk about cement and Shree Cement's numbers in focus. Vivek is here. I was going to recap those numbers for us. Vivek, back to you.
Well, that's right. So Shree Cement, a good set of numbers, a sharp recovery on a sequential basis, largely aided by the fact that petcoke prices sequentially have dipped. Now, looking at the numbers themselves, remember, volumes have dipped 1% on a year-on-year basis. Revenues coming close to 4,235 crore versus the poll of 4,490 crore. The core EBITDA coming in at 947, compares very favorably versus the poll of 880 crore. Margins at 22.37 versus the poll of 19.6%. The EBITDA per ton has improved strongly on a sequential basis at 1,080 rupees a ton versus last quarter at just around 780 rupees a ton. Power and fuel costs, like we mentioned, down 28% on a year-on-year basis, and the management has indicated that it is on track to commission close to 15 million tons of annum per capacity. This is in the first quarter of FY26. Expect green on Shree Cement today.
Thank you. And what about JSPL, Vivek?
Well, on the other hand, JSPL results don't look so good compared to what the poll was as far as CNBC-TV18 was concerned. The revenue has come in close to 11,750 crore versus the poll slightly higher, 11,673 crore. The core EBITDA has come in at 2,184 crore versus the poll of 2,285 crore. Standalone EBITDA per ton has come in at 10,668 rupees per ton versus the poll of 11,230 rupees a ton. So operationally a miss, expect some green. Along with that, debt has inched up sequentially. The company is in the midst of an expansion plan looking to raise its capacity from 9.6 metric tons to 15.9 million tons. Now, the other key worry that analysts have pointed out is the fact that the company has gone ahead and given another capex. Now, the capex framework from FY25 to FY26 stands at 23,400 crore, and this is something that the street is looking for in terms of more clarity. So expect some red from JSPL in today's trading session.
I mean, for steel players, of course, I mean, the bigger news flow is going to be, apart from specific results, is the safeguard duties. And, the clamor has been rising that something should be done sooner rather than later. Well, Bank of Baroda is the next one. Abhishek is here with details of this one. Abhishek, morning.
Morning, Prashant. So operationally, a very weak quarter for Bank of Baroda, especially in the light of the fact that their asset quality has improved. Despite that, the net interest margin on a global basis is at 13-quarter low of 2.94% versus 3.1% in the previous quarter, which suggests that higher cost of borrowing or cost of deposits or the money coming into the balance sheet is at elevated interest rate. So domestic net interest margin is at 10-quarter low of 3.1% versus 3.3% in the previous quarter. Even their international net interest margin has declined to about 1.83%, which is an 8-quarter low versus 2% in the previous quarter. CASA ratio across industry, you are witnessing a declining CASA ratio. For Bank of Baroda, it's at 18-quarter low. Quarterly annualized credit cost is at 7-quarter low, which is heartening to see because slippages have reduced on a sequential basis, that is quarter on quarter. So gross NPA ratio, one of the best that you are seeing in last 10 years or even more, 2.43% versus 2.5% in the previous quarter. However, return ratios don't look so good. So return on equity is at 10-quarter low of 17% versus 19% in the previous quarter. Their P&L with respect to NII is below our poll. However, thanks to lower provision, their PAT is ahead of our poll. Back to you.
Okay, all right, got it. Abhishek, thank you for that. So not a very good quarter. We'll in fact connect with the management of Bank of Baroda and discuss the trends and the outlook from here on. Let's now talk about Kalyan Jewellers, a stock that's been in news for all kinds of reasons beyond earnings. But yesterday it was earnings that came through. Vinny, how do they look?
So earnings this time are looking good, that given the Q3 update, which also showed strong earnings coming in for the company, and that is what they've delivered, 39.5% growth in terms of revenue. Margins at around 6% this time versus 7.1%. So just keep an eye out on that one. Overall, in terms of profits of the company, that has also seen a growth. Now, in terms of internals, the SSSG growth, that has come in at 24%. In that, South revenue is around 35%, non-South is around 48%. Starter ratio at 29.5%. So numbers are not looking bad. We're on the back of numbers. It's surely a strong performance because the stock has also fallen around 45% from its highs. So keep an eye out on the move coming in for the stock. But do not forget, another important announcement that they made is that now they've reappointed Anish Kumar Saraf as who's the managing director of Warburg Pincus and as a non-executive director on the board of the company. Again, it's a reappointment coming in. Previously, also, he was a part of this non-executive director list. So this could be interesting to watch out for, and we could expect a bit of a green coming in for Kalyan Jewellers today.
Thank you very much for that. 795 was the high on Kalyan Jewellers just at the start of the month, and the stock closed yesterday at 440. Big fall. Vivek is now back with us for OneSource Pharma. Vivek.
Well, that's right. An important development here as far as OneSource Specialty Pharma is concerned. We accessed the term sheet. What we understand is that there's a block deal likely in today's trading session. The total size of this particular block is close to 6.8% of the total equity, indicating that the size of the deal is close to 1,200 crore. The floor price is at a close to 4.5% discount to yesterday's close, so 1,545 rupees a share. Who are the sellers? Two promoter entities and a TPG affiliate, Tenchi Pharmaceutical, Pronoms Ventures, and a TPG affiliate of Medela Holding. There is a lockup on further sale of shares on all three of these entities. Expect some red to begin with today.
Okay, all right. So keep an eye out on that one as it opens up. Let's talk about Navin Fluorine. And I think the numbers came yesterday in the afternoon. Upasana has got more details on this one. Upasana.
Well, the company has reported an upbeat performance, mainly aided by the margin expansion. Revenue was in line, while PAT and EBITDA margin stood above our poll. Now, Q3 revenue growth for HPP stood at 22%, specialty stood at 26%, while CDMO reported a revenue growth of just about 8%. Now, coming to the numbers, revenue stood at 606 crore with an uptick of 21% on a one-year basis. Margins saw an expansion of 920 basis points at 24.3%, and PAT stood at 84 crore with an uptick of 7%. Now, company in its con call highlights has given an outlook for 2025. It says that it remains confident of ending the year with 25% plus EBITDA margins, and it also says that scale up across the newly commissioned projects will be driving growth from FY26 onwards. It has also updated that additional R32 capacity at a capex of 84 crore is progressing on schedule to be commissioned by Feb 2025. So overall, upbeat numbers. I expect the stock to open in green.
Okay, all right, Upasana, got it. We'll watch out for Navin Fluorine. More numbers. PB Fintech also reported yesterday. We've got Yash with the details. Yash, how are the numbers?
Well, Surabhi, PB Fintech has managed to deliver another strong quarter, and this has happened over a strong base which they had to work on. The premium which they generate for insurance companies, that grew by 46% at about 6,135 crore rupees. The revenue which they derive in terms of commission and other income, that grew by about 48% at about 1,292 crore rupees. Contribution was up 27% at 330 crore rupees, though contribution margin came down by about 400 basis points at about 26%. Adjusted EBITDA, that has doubled in the quarter at about 79 crore rupees versus 39 crore rupees. Adjusted EBITDA margin, that was up 200 basis points at 6% versus 4%. And PAT, that also grew at about 95%, coming in at about 72 crore rupees. Importantly, the annual run rate has also increased by about 46% at 665 crore rupees. So it's a strong quarter for PB Fintech. The stock has corrected about 21% in this month itself. It'll be interesting to watch how the stock performs today.
Okay, and the PB Fintech management also joins us shortly, as we outlined earlier. Yash, thank you very much for all those details. Biocon is the next one. Vinny's back with more. Vinny, morning.
So in terms of numbers that's coming in for Biocon this time, it's a bit of a miss versus the estimates. But before I start off and give the details in terms of numbers, do not forget that Q3 FY24, there was this branded formulation India business which was included as a part of revenue. Now that time, on a like-for-like basis, it's not a comparison that we could make on a year-on-year basis. So yes, it's an adjusted number that we're watching out for. Yes, versus estimates, it's a bit of a miss coming in terms of the margins as well as the revenue front. But like-for-like basis overall, we're seeing a 7% growth in terms of revenues. 3,856 crores is what the revenue is at. Margins came in at 20%, while the EBITDA is also seen a growth of 16%. In terms of segment revenues, biosimilars has done quite well, 14% growth versus research, which is seeing an 11% growth. A bit of a subduedness that came in just on the generic side of the business. Now, do not forget, there is a bit of a miss on the margin front, but the company has gotten clearance for two of its important facilities in the biosimilar front, the Bangalore as well as Malaysia facility. That is going to be a key growth driver for the company going forward. So maybe the stock could open up in the red and then move to the green side. So let's watch out for Biocon.
Thank you very much for that, Vinny. Let's do a quick recap then of the top stocks. Stocks with positive news flow are Shree Cement, PB Fintech, Navin Fluorine, Kalyan Jewellers. Stocks with negative news flow this morning are Tata Consumer, L&T, Biocon, JSPL, Bank of Baroda and OneSource Specialty. But from stocks, let's get to commodities. Manisha is now joining in with a complete roundup. Manisha, the big headline-grabbing story is gold, and gold is now above 82,000 rupees in India.
Oh, well, yes, it is. And, the gold is trading at an all-time high in the international markets as well. We've seen $2,800 announced for this one, as, yes, the Indian markets have seen 82,000 rupees, and this is just on MCX. So when you go out to buy gold, you're paying much higher than that. Not just gold, silver is trading at a 6-week highs after Silver Institute came with a report saying that silver is headed for a deficit in global markets for a 5th straight year in 2025. And then you have seen many of the metal prices continue to gain as well. Copper is up on short covering. Zinc is gained because we are looking at a global mine output decline for 3rd year. And aluminum supply disruption concerns are supporting that one as well. And then it's not just about metals. The crude oil prices have seen some rebound also. This is the crude is headed for a 2nd monthly gain. The U.S. says that they could exempt crude from levies, tariffs, and that has been supportive. Markets also will watch out for OPEC and allies meeting. That's on 3rd of Feb. So ahead all of this, we're looking at strength come back in case of commodities in the Asian markets right now.
And tomorrow for gold, Manisha, something could happen. I mean, import duty change, I think, is widely expected, right?
Oh, yes, absolutely. And that's the reason in the Indian markets, we are looking at a discount of $30 to $40 an ounce because a lot of people are trying to sell their gold ahead of that duty change. So, well, yes, buyers aside, dealers selling gold, it's quite a crazy market in India right now.
All right, Manisha, thank you very much for that. So as commodities, we'll take a quick commercial break here. We come back with our first management of the day, PB Fintech, after their third quarter numbers. Yashish Dahiya, Chairman and Group CEO of PB Fintech, joins us in just a bit.